Today is the 16th of July, 2026, 10:30 a.m. CET and 4:30 p.m. Manila time. This episode, no surprise as China records soft GDP growth in the second quarter, big ticket IPOs coming up in China's stock markets, oil on the rise again, and US small caps as new rising stars.
Hello to our listeners. I'm Mel Lopez, Chief Economist for ASEAN.
And I'm Peter Lundgreen, the founding CEO of Lundgreen's Capital.
This is Sound Economies with Mel and Peter, a weekly East meets West podcast by Lundgreen's Investor Insights. Join us as we analyze developments in major economies and financial markets globally.
Hello, Mel. How are you this week? And welcome back to Manila after your long trip.
Hi, Peter. Yes, back for more action. Of course, the podcast continues as we always do. Of course, we jumped back to work, though we didn't really step away for a lot because a lot of movements in the markets that we have to monitor on the daily, and it's part of life. Of course, the recent reigniting of tensions at the Strait of Hormuz has been one of the key market movers that we're constantly watching out for, and that's what's been keeping us busy, and also how it affects the many publications that we have. A lot of adjustments there as well, because one day oil is back to pre-Hormuz levels, and then the next day it's threading new highs. So yeah, a lot of moving stuff. What about you, Peter? Still enjoying the sunshine out there?
Yeah, but as you say, Lundgreen's never sleeps. Yeah? So it's we open to our clients every day,
Yes.
and it's actually still pretty busy doing business. Simply, that's actually quite good, and we will not complain at all for sure.
Of course.
Yeah, so that's nice. And again, interesting topics today. We will simply start up with one of the major economies. We've been there before. That is China. They came out with GDP growth numbers this week. So of course we need to give that a comment. It is important.
No surprises here, Peter, that the second quarter growth figure in China has eased from 5% in the first quarter. We're at 4.3%. It's the lowest since the fourth quarter of 2022. So it is a bit concerning, but definitely not a surprise for the economy. We did talk about this a few episodes ago that retail sales numbers weren't looking too good. And it did reflect here in these numbers where although the first half growth pace is still within the tempered target of 4.5% to 5% GDP growth for the full year, it is quite unusual to see the second largest economy post, I wouldn't say dismal because it's still definitely rapid, but this pace it could be faster, but it's of course a mix of um, unfavorable domestic and international conditions that led to this. Of course, China is not exempt from the oil crisis as well as the continuing effects of last year's tariff war. It does still reflect in these numbers. But the bigger factor really is still the very uncertain, very soft consumption at home. The property downturn of 2021, 2022 is still very much in effect. And as a result, consumer sentiment has not recovered. The soft housing market has shown or has remained on this path, and therefore, households remain very reluctant to spend. We did see that the economy is still very much hoisted up by external demand, which is, of course, great to see for the world's manufacturing giant, but they have long been trying to shift towards domestically driven consumption, and it's not happening even in the aftermath of mega subsidies from 2 years ago. That the impact of that has really declined already. So I guess this is kind of the normal really in China, and it's very hard to stimulate domestic demand when people know that the housing market remains depressed, and they really don't spend, and they hesitate on making big spending, big purchases, because they're not sure if they can afford it better the next day, because inflation, or in general, prices are down, producer prices are down, and it really is largely a demand problem. And even then, we don't see that the government, Chinese government, will resort to another mega stimulus program. Mainly, it's really debt that they're keeping watch, because at 99% of GDP, it's really uncomfortable to be in that position. Ideally, you'd want to bring that down, maybe 60, 70%, even lower, better. But it's not something that we see China putting at risk further, because it could also raise concerns about how creditworthy China is. And it may be hard as well to see a substantial lift in the second half of the year. So this is pretty much the trajectory that we're going to see, especially with rising or renewed tensions at sea. It is the nervousness is likely to prevail abroad and definitely onshore.
Yeah, so the main reason that you're mentioning is issues that we have touched past, I don't know, almost 2 years. Of course, it's big issues, but they're also a bit static. Sort of, it starts to become what we call a structural problem. But the government debt is, of course, a concern for Chinese government, and they are more concerned than Western countries are, the old economies. It's absolutely good that they take the debt level serious, because it will be a growing risk for a lot of companies going forward.
Yeah.
But a good, on the other side, a good reason, or a good way to solve the government debt ratio to the size of the economy is to have a high GDP growth, yeah, because then you simply get your debt ratio improved automatically. So that's a good way to do it. But it requires, as you say, people to start to consume, or alternatives that the global growth will start to turn around and simply improve. Now the last one is not in sight, so we will see sort of a turnaround in global growth. But there are also a couple of other observations. When we talk about Chinese economy, we have long considered China's economy not as an emerging economy anymore, but simply what you call, or IMF call, an advanced economy. That is what we would call a mature economy, or the Western-like economy. Yeah? And that is simply because most of the Chinese economy is absolute like most Western economies, in how it works, how the daily life is, in terms of how you live and whatever you do. Other parts of China are still certainly emerging. Some would usually call frontier. Yeah, the big differences in China, how wealthy people are, and the quality of living. But on the other side, you can also find that within the European Union, there's a big span from
Yes.
from east to west. Yeah. So we also see some of the same sort of movements and how the economy is behaving. If we go 20 years back, 10% of the total Chinese population, they considered themselves as doing some sort of startup. As they saw themselves as entrepreneurs. They might have a job in daytime, but they were doing some sort of entrepreneurial activity. 10% of the whole population, yeah, that generates dynamic into an economy. Now that ratio is dropping, and has dropped the past particular 7 to 8 years. And it's moving towards Western economies, as we do certainly not have 10% of populations that consider themselves as sort of entrepreneurial activity in the spare time. Wow, if that was the case, Europe would be bubbling like champagne. Yeah. But China is very unfortunately adjusting to sort of these mature economies, and
Not
it
the
makes it
part of mature economies that we like.
yeah.
Yeah.
And it makes it more difficult to maneuver the economy, because, as we say, there is only one. There might be different solutions, but the straightforward solution is to get people to consume more. And there, as you say, they need to feel probably more confident
Right.
about the future economic
Conditions.
situation, basically. So yeah, but that is China. Still high growth compared to the rest of the world, or the big economies, or mature economies. Absolutely, and that is very positive.
Mhm.
But it's not reaching the level that's would to make it absolute perfect. But
Mhm.
still comparable, a lot better than many other countries, and it still makes China interesting for
Yes.
that angle alone. Yeah. Good. We shouldn't be too negative because there's no reason. Fantastic. Now, good. But let's stay in the Chinese area. But let's dive into to the IPO market. What we like.
Yes. So while the consumer market is facing a long sentiment problem, it is generally positive towards Chinese stocks, particularly big ticket IPOs in the next quarters, I
Mm,
should say. So there are three major companies that are looking to go public over the next year, and uh the most recent or the imminent one would be chip maker called Changshin. So it's a state-owned manufacturer of semiconductor chips. It's the fourth largest producer globally after the Korean giants. It is planning to do an IPO on July 27th. So that's in the next 2 weeks, uh, at over $8 billion. That's the amount it plans to raise. And it would be the biggest in Asia so far this year if it does happen and it is ready to go. Very attractive figures. They did report a first quarter revenue increase of 719% year on year. So that's definitely something that is fast growing, that's for sure. They probably got the timing correct as far as their own financials are concerned, but the external market is another question entirely. They
mm,
are looking to invest in the mainland market, and they want to grow basically their production and get a bigger market share globally, which is why they're raising more funds. And in the next month, we are anticipating the listing of Shein. So it
mm.
is an e-commerce giant that's focused on fast fashion. So I guess
Yeah,
if we can call it ultra fast because it's
it is.
promising to get clothes, dresses, anything you want, even accessories to you in a couple of days, and it's
Yeah.
very cheap. It is gaining ground even in Europe as well. I saw a lot of ads when I was there. They are looking to raise $2 to $3 billion in their Hong Kong IPO next month, and they have tried before to go public. First in New York, the second one was in the London Stock Exchange, but ultimately they found it their potential home at the Hong Kong Stock Exchange, and that's what they're doing next month. And over next year, um, this early, there is buzz around DeepSeek's planned IPO. So we don't have a lot of details about that yet, but what the news reports are saying is that they are keen rather to submit their IPO documents this month. They are also looking at a Shanghai listing in the second quarter of 2027. And of course, it is much anticipated because DeepSeek really unlocked the AI boom for the China markets last year. And it's probably going to do that next year if all things go well. And for AI listings, you would want to see this in the mainland boards because it is very much likely to receive a lot of attention and investment. They're looking to raise funds to fuel further growth, research and development, even data centers. There's still a lot of need for that, especially in terms of AI support infrastructure in China.
Mm,
And that's what's needed to sustain the momentum. And already there is interest among global investors on how they can get their hands on these stocks. Of course,
mm,
there is always that reluctance to maybe dip their hands into the mainland markets, but it's proving to be a very formidable investment opportunity for those really in search of high growth companies. And it is an interesting time while the rest of the financial markets may be struggling with what's happening at the Strait of Hormuz with US and Iran. There are
mm,
these pockets of opportunities coming up within Asia, particularly in China, which is keeping investor interest afloat despite
Yeah.
the otherwise gloomy GDP or macroeconomic data for the Chinese economy. So it's really I wouldn't say disjointed, but it's really a different ball game as far as IPOs are concerned. We're really looking more towards company fundamentals. We did talk about SpaceX a few episodes back, and we said it was all hype. This may be a different story altogether, considering that most of these companies that this big IPOs being planned, these are already in operation. You see them at work, and unlike SpaceX that needs the money to send people to Mars or to the moon, these companies are already showing their proof of concept. If actually not proof of concept because they're actually selling their stuff already. So this is more uh likely to be successful in terms of performance. SpaceX already went down from its IPO price just a month after its debut in New York. So not likely to be the story for these companies.
It would be extremely interesting, these IPOs you mentioned. Maybe we should put a comment on the chip maker.
Mm-hmm.
Just of a general view from our house. We do prefer companies that origin from what we call the private sector. An
Yes.
official Chinese is not private sector that does not exist yet, I believe. Companies that are started by private individuals and are not state-owned companies, enterprises. So this is a general view we have, and the chip maker here is, as you say, is actually
State
origin
owned.
from the state controlled. Yeah. Anyway, but and that could be worth to consider for investors jumping into to that name. And further, yeah, as also you say, and now SpaceX is now trading below the IPO price. Interesting if that will influence sort of the demand for an chip maker than IPO. And Shein is also extremely interesting. It is completely different. Of course, there's a lot of logistic algorithms, IT behind the company
Mm-hmm.
and how it works. Anyway, it is retail. It's consumer
Yeah.
sort of consumption, and that is of course a part we look at anywhere in the world. Completely fascinating how they do it, what they do. What I consider is if from maybe from it could be from European investors, if they would question the sort of how fantastic this business setup is for the climate. Yeah,
Yes.
it's it is really consume and throw away. Yeah. And that's it is, as I say, ultra fast fashion. It's impressive. People they wear it once and then it's out again. Yeah, maybe, or but that's at least what
Yeah.
is possible when we look at the price. So that's interesting. If that could be a, sort of a conversation among investors, in particular in Europe, if their environmental and climate footprint is acceptable. Um, I could imagine, but that would be
Mhm.
very interesting as well as a part of the IPO. But the IPO is and the company is fantastic, impressive by itself.
In growth, yeah.
Yeah. Maybe some investors who are looking into it should also look at the sort of the control of the company. There's been a lot of discussion. Is it a Chinese
Mm-hmm.
company?
They're
And
Singaporean on paper, but yeah.
yeah, there's some links back to China.
Yeah.
And if that means something for the investor, it's also worth to study. Impressive, fantastic, and we will spend time on it for sure. Otherwise, a bit more sort of, I wouldn't call it day-to-day business because that is absolute too heavy for that. But the Iran-US situation is back on the table with new bombings and the Hormuz Strait.
Closed again. Yeah.
We observe the comments from oil traders, from oil insiders, that now the backup of oil is start to be significantly more limited than it was when the conflict between US and Iran started. And we expect it to give some jitter the next month's time, or how long time it is before the US and Iran will try really to settle the conflict. And that will be a negative news. It will be negative for so it generate volatility, all kind of news or not news, but sayings and headline from Trump, whatever, will move the markets up and down. We are fully aware of that. We still keep the view that things will be settled, but right now our everyday and daily life is that volatility will be influenced more with news from that area. From that, yeah. On to a sort of maybe a summer story. We don't know.
More
we
sunshine.
yeah, that could be as we see it as a good story. Because we also observe how, in particular in US, that the small mid-cap stocks, they are rising in price. They are outperforming, actually. The easiest way to see it is to take the Russell's 2000 index. That is the broadest index, well, sort of the more seen indices. There are actually some that are even broader. But this one is well known. And as of today, it's actually up 20% this year. And that's quite a lot. S&P is up like 10.
Yes.
And then we should remember how much that the tech companies, they weight in S&P. They are absolute dominating here. What we see sort of as a sunshine part of the story is that investors are not looking actively to sell something. They're more looking to buy something that might be relatively cheap. So it is actually more to add to the portfolio or
Diversify a bit.
Diversify, spread the portfolio a bit. But it's sort of in the positive thinking, say, okay, what is interesting to invest into now? And there will be a turn out of tech stocks, but we should also consider that the tech stocks, the value of the tech stocks, are so extreme big. They are really extreme big. They cannot just turn it all into small caps. It'll make the market
Hard to
explode.
get your hands on them, yeah.
Interesting trends and interesting that is this way around, that investors are trying to say, okay, so we're not leaving, we actually try to enter more. That we actually take with as a sunshine indication. Maybe on the beach, some reading about some smaller mid caps could be interesting this summer. Could be a summer trend. So yeah, why not? Otherwise, Mel, let's take the temperature in the world and how we see usual weekly sunshine walk arounds. What do we say? How is Southeast Asia and Asia?
As we survey the outlook in this region, Peter, of course, clouds remain. It hangs heavily in the past few days due to the new or renewed tensions between US and Iran. Of course, there is greater nervousness, I should say, but otherwise, there remains pockets of sunshine, at least for investors to explore. For example, we did discuss these interesting, promising IPOs coming up in the Chinese market, and that could very well create good positive shockwaves across stock markets in Asia. There are challenges still mainly about inflation and oil, especially with stockpiles likely to be depleted if this goes on further. But yeah, there remains high growth sectors like technology, AI. In some parts, yes, consumption, but not in China currently. So yeah, we remain optimistic about these pockets of growth, which we can capitalize on, Peter.
Yeah. We are ready for high volatility, let's say, until maybe end of August. This expectation would be solely linked to the Iran-US conflict, the Strait of Hormuz. Not so much else. It's not so much central bankers, despite they are still in US talking about a bit higher rates, but that is already priced in. Overall, yes, we see no reason to change our recommendation about being overweighted risk. When we talk about fixed income, we have moved down to the short end duration, but we like the credit risk still.
Mm-hmm.
And again, as we talked about here, as a last subject, if investors are more looking into find investment opportunities, we think it's actually pretty positive, and this is also how we see the world, and that also underlines our appetite on non-listed companies that typically are as a where we prefer the smaller and young companies.
Mm-hmm.
That's where there are still very good opportunities, and also in Europe. So it's not that bad at all. As actually we do see the sunshine. We are fully aware of the short-term clouds on the horizon, and also a couple of long-term,
Mm-hmm.
but we remain pretty happy. Yeah. So that's basically our things on the template today. And thank you to the listeners for listening. And also thank you to you, Mel. It's great as always to be together here in the studio with you.
Thank you, Peter. We'll be back next week for more.
Thank you for tuning in. As always, we keep a watchful eye on market shakers and movers. Catch the next episode of Sound Economies with Mel and Peter, a podcast by Lundgreen's Investor Insights. Available on Spotify, YouTube, and wherever you listen to podcasts.
Lundgreen's Invest has secured a historic quadruple exit for its high-tech defense fund. Following the sale of 4 investments to the Danish defense company Omni Capabilities, the fund's value jumped by as much as 40% in just one day. The good news? This evergreen fund is officially open to new investors, with an exit possibility every 6 months. Visit lundgreensinvest.com to know more about this co-investment opportunity.
Lundgreen's Capital has been in the business of investment advisory and wealth management for over a decade, with our high-performing and multi-awarded funds to show for it. We're taking this to the next level through an IPO in 2 years. Join us in this journey. Visit our website to learn more.